Point Show, where we talk about investment and business and everything in between. Today will not be different. We start off with the stock market segment where we talk about the gains and losses as of yesterday, then over to the business segment where we talk about the financial books and records that small scale, medium scale businesses need to keep, and of course off to the sector where we'll be focusing on a great sector. Case in point, snail farming. So we have a lot to talk about today. Stay with us. We'll return after the break to go in full detail of everything I just said. Be right back. Back. This is still the Profits Point Show, and this is the stock market segment. I have, as usual, my able analyst, investment analyst, actually, Ambrose Omodium from Invest Data Limited. Ambrose, how are you? Good morning.
I'm very fine.
Thanks for coming on board. You sound good.
Oh, no.
How's the stock market?
It's looking good.
Thank you very much. How's the stock market from last week, Thursday, to yesterday? That's a week.
It has been an uptrend, apart from market slowdown for 2 days. Yesterday, market was.
Well, that was expected because the market has been hot for many days.
No, for good 4 months now, market has been up now. For the month of October, the market gained about 8%. If the index is gaining 8% in a month, we're talking individual stocks on different sectors.
That's so exciting.
Yes,
so market is like coming down now?
No, not coming down. Market just adjusted for 2 days for profit taking and responded yesterday powerfully.
So it's going up again.
Yeah,
so for the sake of people that just want to come into the market, at the end of the day, some people are probably bought and they've made like 20, 30%, then you're just coming in. Some people are afraid of stocks being dumped on them.
Yeah, exactly.
Is it still a good time to buy, or you need to wait for market to resend a bid, then you buy?
No, it's still good time to buy because the factors behind the movement are still intact. And also, we are already at the end of the year. And the end of the year, they are about to be portfolio repositioning and investors want to position against the new year. And I tell you that the man that bought stock today at a lower price is better than the one that's buying at the end of the month at a higher price. And it's a good investment to look at stocks that are then at a discount. Take position at this time, good price, and then look forward to make money. So that these days, I tell you that let your investment go guide you, because your investment will not give an insight the kind of stock you buy to meet that goal. But before people are just invest because their friends are investing, before you put down your money for investment, you know what you want to achieve. Then you not set a target. Oh, this is my set target, this is my buy target. And once that is done, that investment will want to achieve at the end of the day will always guide you how long you stay position, how long you not. But when you are doing bet that I want to invest for long term, that's why when I see many people say I'm a long term investor, I shake my head. A long term investor that enters store that at 4 naira, it starts selling at 10 naira. You take advantage of it, you say you're a long term investor. No. And it just came back again down to 2 naira, you're still a long term investor. You see above 1 naira, 2 naira, you're a long term investor. No, you take advantage of that. That's why timing is very important. Even the Bible said, the people of Israel in the Bible that they understand season and timing. If you understand that principle that is timing, you need to know when to be in the market and when not to be in the market.
Okay. The past few weeks we've identified some sectors: healthcare, sector, maybe banking.
Yes.
Any other sector? Has any other sector joined? Or still these three main ones?
The fact that the food and beverage sector, the market sector, is coming up powerfully, and also the report that was released yesterday also confirming that there's improvement in that sector. And the result of flour mill, northern flour, honeywell. No, you see the results, it's a bit better than what they did the previous year. And also, if you look at what result was released yesterday, the OCOP Purchasing Manager Index that was released yesterday night, see that the economy has improved a little. That's why this rising inflation has been a concern for us, we analysts and investors. But we've seen that figure yesterday night that we are moved from 49.6 to 50.2. It's an improvement. That means we have crossed the contract stage now. The economy is really coming up again. That means that low output economically has really improved now. That means we have crossed the 50 mark. That 50 point, so to know whether the economy is doing well or not. Anything above that means you are growing your economic activity. Anything below, now we are doing for the month of September, we are around 42 points. In October, we moved to 49 points. It tells you that the economy is improved. Despite the SARS impact and the coronavirus, for the past 6 months, the economy has been on below on contraction, let me use that language, but now it has crossed to expansion. that expansion is what giving me little release that, even though the inflation is going up, now that we're coming, that means that inflation we're looking at, it's a good that a little time to improve, because stagnation means when inflation is rising and the economy was output is low.
We talk about that fully. All right, let's go over to gainers and losers. As of yesterday, at close of day on the Nigerian Stock Exchange, Linkage Assurance actually topped gainers chart, 10% up. Then Sterling Bank, 10% up. WAPCO, Honeywell, ABC Trans. Those were the next three stocks. So those were the 5 top gainers as of yesterday. And on the losers chart, we had Cornerstone losing 8.62%. Legacy Assurance, Nest, M-Benefit Nest, then Union. Then Union Bank and Unity Bank. So those were the top losers. Looking at the losers chart, you see that top 3 were actually insurance. In respect to the fact that the highest gaining stock was also insurance stock. So what's going on? Is it a case of profit taking? But insurance sector also is being on the uptrend, even all through the coronavirus time.
Yeah,
but now we're seeing them here as of yesterday. What do you have to say today?
And also, their numbers have improved, some of them.
Yes.
But what we are seeing, the charts now has been displayed that one, the traders are taking profit. And all these Kobo stocks, you don't stay too long. Like I tell you that you have to be smart when you are trading Kobo stocks, because most times you hook in such position. On that note, when you make profit, you don't waste time to go out of it. That's what's happening in the insurance sector. And also, like what we discussed last week, that the impact of the last thing, yes, if those companies are insured, and we're saying that it's probably they are not insured. If they are insured, I would say you're going to weigh down on some insurance company financial year results. Not this one, because third quarter is out already. They are full year. But on that note, so smart investors also can also be taking profit to pay. Let's see their full year number for let's sell it number and move to the other. Now there's another sector that's attractive, that some stocks are selling at a discount. That's why for me, the trend is not a bad one. When you make profit here, you move to another person, another sector to make profit. For insurance sector, they have been resulting in a good profit for investors for April this year. For me, expected.
All right, so let's go to earnings reports that actually came during the week. World Bank Q3, third quarter 2020. Gross earning was down by 10.8%. Profit after tax was down by 35.32%. This, to me, is not a good result. Because I'm sure there's some banks, I know banking results were not been fantastic, but not this bad. What do you have to say to Wema Bank? Wema Bank is still a regional bank? Or are they national now? National now.
But
okay.
Looking at even the figure, yes, we understand that Wema Bank is one of the second-tier banks, and the numbers are not too attractive, and even the talk of the gross earnings and the earnings and the profit after tax, they are still small. I mean, it's a small size bank. We don't expect much from them, but I'm surprised that last year, 2019, their numbers were really up. But this quarter is just a signal because of what you expect from Wema Bank going forward, actually because of the full-year result. For others, that sector, especially the first-tier bank, that's why the market is looking at first-tier bank. I want to see their number, but those ones, you are sure of dividends and other. If the numbers will go the way of this Wema Bank, it will be a disaster. But I don't see the numbers going bad as this. For that, since we have seen the result from Stanbic IBTC, you see, it's one of the banks that we know can be compared to, like to those first-tier banks. The number has given us, also the result from Fidelity also have given us insight what the sector will look like. And if you look at the number that is following the, which is the Wema Bank, Union Bank, the number is even better than that of Wema Bank.
So can we say that this result is just peculiar to Wema Bank?
Yes,
it's not the sector itself.
Yeah, exactly.
When was the last time Wema Bank declared dividend?
It paid last year.
Oh. Should we expect anything this year?
Yeah, I don't expect.
You don't expect?
Yeah.
I'm not expecting.
Because this era of dividend cuts and seeing the impact of COVID-19 and all those levels, financial sector is not because they are resilient, in Nigeria, that's why we are seeing their posting good number. I believe most of them in that sector will cut their dividend. But for something like bank like Wema Bank, this number for third quarter, you're expecting that dividend should be very small, because it is very slow for me.
Okay, so if investors, if you're not gaining from dividend, maybe we should look towards capital gain. How is the price in the market?
Yeah, it is below 70 kobo.
As in, is it moving with the rally?
If I move the rally before the result came, and this is what we also pull it down.
They will bring it over again.
Yes, and then the market will react to it. You know, like I tell you, that market will always teach you a fuck up. Or when you bring the result that is not good, market will react to it. When it is good, market will appraise you by seeing how the price went to rally. But when it's not bad, they sell you down.
All right then. Union Bank Q3 third quarter result 2020. Gross earning went up slightly, 3.61%, and profit tax also came down slightly, 0.81%. EPS same
flat.
Flat.
This one, investors here has more hope because this number they posted last year and able to pay around 25 kobo, 15 kobo for shareholders. And after like 5 years, no dividend, 6 years, no dividend. But last year they started paying dividend in 2019. Seeing this number, if you are in that bank, the number for me is not bad. You know, not a bad one, but you can expect good dividends. Like what they pay last year, if not good, but what they pay like is possible. But it depends on the company's management decision or the board of directors.
Yeah, this life is very interesting. There was a time in life when you have the first banks, Union Bank, UBA, before STB joined, you know. Ghana Bank, they were the banks, you know.
Yeah, the old generation one.
Old generation, they were the first tier. Now, Ghana Bank can as well fall down to third tier. I don't know. I don't see the difference between them and Unity Bank results.
Yes,
Bank, for instance. And then Union Bank, keep wondering, when they get it wrong, because I keep wondering what perception a lot of time matters. When people perceive you as old, and you are in a generation of, you know, techie people want, you know, they are fast forward, fast moving, thinking on your feet. It's difficult sometimes for people to associate with, for instance, a bank. So I want to open an account. Naturally, Union Bank won't come to my mind. There are some banks I've never entered before in my life, and I don't see me enter because if you give me the check, I'll write you send someone there. It's just this perception that comes with, why would I want to go here when I can go to Zenith or GTB? Maybe sometimes these banks need to rebrand. UBA tried, they merged with a young generation bank, but First Bank is still struggling with the brand thing. Union Bank is just Union Bank.
Well, I don't know. Do you know the point is that this bank, one of the banks that has the best tech in the sector. I'm not saying that.
Tech? What do you mean tech?
When I mean their softwares for banking system, they are one of the best. I'm also knowing that the way they are expanding now, we are seeing hope that that's why they're able to pay you dividend last year. That means there is hope for Union Bank coming up now. No, these banks, the banks, the old banks have suffered a lot of practices like that because the management style then is not what the new national banks are adopting. Remember, those these banks, the First Bank and Union Bank, every year they are reaching out bonuses, and that expanded their share in issue, and the performance was not to accommodate that. Not only that, their risk management was not too good. Remember that First Bank has sometimes pay about 100 billion non-performing loan, non-liquidation for that. No, if the other small bank do that 100 billion, they go there, just the First Bank is a bit stable and big. That's why you can see, But I think First Bank is coming up gradually again. Now that they're able to take off their risk aspect of it and reduce their non-performing loan, it's good for First Bank. But Union Bank need to double up. You need to go down. Since they're having good techs now, they're coming up. They also double their.
It's funny. And, when you're using words like coming up, they're doing their best. For banks like First Bank and Union Bank, there was a time when I was still trading then that First Bank share price, GTB and Zenith, they're usually like 1 naira, 2 naira. How much is First Bank now though?
First Bank is around 7, 8.
Interesting. GTB?
7 naira.
Zenith?
7. Zenith Bank is 27 naira.
So no more. Alright, let's go on.
No, they are the same, but you know that. The good investors, you know where to be now. Especially now that both the pension fund and all are looking for where they can get good yield. Because the way the inflation is rising and at the same time, the low yield in the money market and the fixed income, we're looking for where we can make good return. And the only way we can hedge also inflation is for an equity market. So I think that funds are leaving all those investment into the equity market as we speak now. That will give the market a big push. And also if the numbers continue to maintain this tempo we are seeing, if you look at the third quarter result for the companies, they're better than expected. If you follow that trend and in 2 years, see such numbers, I think that equity market will catch fire. Because when they are paying dividends and it's good, they see people want to enter there for now. And the purpose for CBN leaving those rates low is just to drive the economy. I can see the impact just from what I just told you earlier that the MPR, the purchase manager, just moved to expansion now. That means those low interest rates we are seeing because they're impacting the economy gradually. That means I don't expect them their next MPC meeting to reverse it or pause. If you want to maintain this tempo, Now, you think to leave let the economy expand to a level where you can adjust your interest rate again. For that, as far as the interest rate is low anywhere in the world, when there's no interest rate, capital markets benefit immediately for that sector like the economy. When they say the first way to benefit for that interest is capital market.
So your prayer now is that TD should just remain where it is.
Actually, if you look at this,
of course, you won't tell me what your
actually, if you look at this CPN governor, the first panel on this one, I will tell you the guy has helped the equity market more than any other governor because in terms of what he make policy that favor the economy and the market. If not him, I think capital market will come here because of the coronavirus and the COVID-19 impact, but because of the policy they are making to drive the economy, it's also impacting positive. And when the economy is doing well, to reflect on the economy, on the market better. But because now there's liquidity in the market, that's why the economy is dragging fees. That's why the market is doing. That means when the economy improves, to come also a double support for the market.
All right. Briefly, let's talk about the impact of stagflation on the economy. Start off with what stagflation is to begin with.
Yeah. Stagflation is defined just simply as a situation where there is rising inflation and therefore low output in the economy. That's why it's called stag. Because your output is low, while inflation is rising, and that will lead to poverty. And in such situations, if you want to reverse the issue, the government has to spend from their nose, has to become the highest spender to make sure there is funds in the system. But when there is situation like this, it becomes something tough for anybody to solve. But you as an investor also look at that time to question shuffle your portfolio to make sure that you are in stock that you can edge against inflation. But the good thing that as we speak now, we can't say we're already in stagflation now. Because we just saw, if before now, where we are having a MPR of 49.6, we actually say, okay, that food is still low, while the inflation is high. But now that inflation is rising, output is coming and rising again. We can't call it stagflation again now because we can see that the economy has improved that much. Our economic output as a percentage of industrial output. For that, I see that there is a
So you said that investors should invest in stocks that they can use to hedge against inflation. Yeah. Inflation is what now?
So for the last figure of 14.23.
Wow.
For the month
so any stock that you're putting your money in must give you a return of nothing less than that.
That is ideally, but if you have anything that's giving you 10% above, because if you are putting your money in Treasury as speak now, Treasury is about 0.3%.
No, we're not talking about
coming now. Why equity market is better? Equity market is better now. Anything that's giving you 10% above is better off than putting money where you are getting less than your negative return is high. But when you are getting at 13%, 40%, you are better off than. Then also one thing that when there's high inflation like this, there are some goods and services that you can pass the cost to the consumer. At the end of the day, your bottom line will be positive. And that bottom line is positive, and your just comes out, you're going to push your price up.
Yeah, as if you're actually selling something that maybe you don't have close substitutes or
that's what I'm saying.
So important
that's
to want to buy.
As an investor, it's part of what you're looking at. Oh, which company I know that the product of this company, even when they pass their cost to investors, they still demand for their product. At the end of the day, such company will put in improve earnings. I will support the price. I told you earlier that anywhere in the market, whether the short term or the long run, it is earnings that support price. Drive price. And this earning, when it comes to the market, also support dividend payout. If your earnings is good, like company is paying before 10 naira, now they're paying 20 naira. That's why you can see the increase in dividend. That will cover. That's why, as a good investor, you don't just sit down when you're investing. You need to get information where to be at the right time and buy right and sell right.
So this is time for people to. It's not a case of 1, 2, 3, 4, 5, 6. I'll take number 7.
No.
Now you have to talk to your investment analyst for you to know what. And it's even more dicey when the market is going up. It's dicey when the market is going up because every stock seems to look like it's beautiful. Or like when the market is down, everybody is kind of choosing. Yeah, because now the market is up. You should just buy. We don't want the case of 2009 or something that happened there. Even stocks that were not having good fundamentals were going up because there's so much money in the market chasing demand.
But the good thing is that I can see that our Nigerian investors are becoming more educated in terms of investment. And I would say kudos to investors anywhere that we have really done, can see the impact on the investing public. Look at the kind of stock that's rallying now. These are fundamentally sound stocks. They are not buying a stock as before. In 2008, 2009, you mentioned, every stock, whether good or bad, we are becoming.
It doesn't matter. It's valuable in the market.
Yeah, but now look at the trend. It's those blue chip stocks that have consistent dividend paying history, and those are also posting better number at the moment. That means investors are looking at where I can get better return. That means investors are becoming more enlightened. That means every investor now should not just follow bandwagon and invest. Sit down and know I have 100,000, I have 200 million, I want to invest. Look at stocks that you know that you are sure this stock, even when market turns tomorrow, I will still have value for my money. But there's some stuff that even the dividend yield alone, or the dividend payout alone, is enough to take off your return.
Thank you so much, Ambrose. Thanks for coming as usual. All right, this brings us to the end of the stock market segment. We're going to break, and when we return, we go to the business segment where we talk about financial books that small scale, medium scale businesses need to keep and why you need to keep that. After the break, stay with us.